Well, we're back, and I'm David Ingram, and the program is either Ingram or Around the World or something. We're still trying to figure out what to say it. Somebody gave me a great name the other day, and of course I was never going to forget it, and I've now forgotten it. But my guest now back was Dan Walkow, and if you want to talk to Dan, now I say this because I have sent the fact you're going to be out here to 3,500 people in the last few days. And at least 5 people have asked me questions that are the kind of thing that they should be asking you and I on this show and cross-border stuff. And I'm trying to figure out just what gets somebody to phone, because your time is extremely valuable, and I know what I charge for somebody for a phone call. And we're saying if you phone us on this air on this, we'll answer it for nothing.
Right.
Free. Instead of paying $450 or something for get an answer. So if you have a question for Dan Walkow on cross-border investing, if you've got an RRSP, the question I sent, did you see the one I sent out this morning that went out that was about the people that wanted to know whether they could move their RRSP to no? Wasn't that a perfect question for you?
It is a perfect question.
They have $40,000 in their RRSP, and they're not happy. The company that they're dealing with doesn't want to deal with it. So she wants to know, can she move it? Right. And, of course, she can. She can move it to your operation. I did mention Daryl Thompson, who's in Toronto, but she says she's living in Washington State. So why would she go from Washington State to Toronto? I mean, that doesn't make any sense. So, and I've been trying to sort of grind you down a little bit because you've...
Right, in terms of my minimum account size.
The minimum account size. So would $40,000 work?
Well,
see, I'm putting you on the spot.
You're not putting me on the spot. I mean, as I mentioned to you a couple of weeks ago, what we'll do is that we'll take the smaller amounts, recognizing, where else these people. There's limited options for folks like this where they can go, right?
Nobody wants to deal with them.
So we will take it, but we'll manage the money differently, and we won't be managing or recommending holding securities direct. It'll be funds or exchange traded funds, something that's cost effective for account of this size.
Okay.
So, but I mean, it's, we really do have to draw the line because it does take time and effort to document somebody, and of course we're responsible for them from a compliance point of view. So there gets a point where if we had too many of them,
you've got to do the paperwork.
You have to do the work. We do try and draw the line, but I mean, in the cross-border side of things, there is some, we'll make some exceptions.
Well, since you were here last week.
Maybe I add one thing further, David, just to sort of, it's a case in point where we'll find somebody, for example, a Canadian that goes down to California and it's not coming back, but they have a stub end of an RSP, say 60,000 or whatever. What we try and do is work with families. So if you have a Canadian RSP, chances are you have an American IRA and an American investment account. So not only can we handle the RSP, but we would say if you can't meet our minimums, that we'll consider your American accounts as well if you allow us to manage them.
So if you've got the IRA and you got a key at the end, you cash out a key into an IRA or something like that. Do you look after a Roth IRA?
Absolutely.
So you can do a Roth IRA or an
health
IRA,
savings accounts,
RSP,
health savings accounts in the United States.
Just about everything. So we talked. You used a buzzword. You said exchange traded funds. That's an ETF?
They're known as ETFs, and they're the most popular sort of form of I guess pooled investments. Kind of the next level from mutual funds, and it's coming on to become increasingly popular. And in my opinion, over in due course, mutual funds will be ETF-ized. We will see the way mutual funds are distributed, or investment pools, will be be made into, if you will, exchange-traded funds.
Okay.
And we will probably see, and this is just my sort of vision over the next several years, is that the distribution method of mutual funds is kind of yesterday's news.
Yeah.
Pools of investments. Let's maybe redefine this. A mutual fund is a basket of investments managed by a money manager in one single pool.
Yes.
So is an ETF. This ETF started where they were passively managed indexes. So, for example, Canada had the first ETF Did you know that?
I didn't know that.
It was the TSE 35.
Oh, really?
That was the first ETF, and ETFs were actually pioneered in Canada. And of course, from those days, where you could buy the index. Now, it was unmanaged. You bought the 35.
Well, you just bought the 35 things that were in the
index.
Or the 30 that were in the Dow Jones type of thing.
Precisely.
Okay.
So today, for example, Canadian, the largest one in Canada would be the TSE 60 index.
Okay.
So this is the 60, I guess, largest stocks representing the Canadian large cap stock market.
Okay, and those are the 60 that are in the TSE 60
Sure.
index.
So you've got the Royal Bank, you've got Imperial Oil, you've got CP, Rail, you've got Manulife, and so forth. So if you wanted a package of the top 60 stocks in Canada...
Don't have Nortel anymore.
Not anymore.
Yep.
So ETFs have exploded, and there's a variety of reasons, but where not only we have all kinds of ETFs in Canada, there's of course hundreds of them and thousands of them in the United States and worldwide nowadays, where you can invest in basically any market. If you wanted to invest strictly in the Standard & Poor's 500, you can buy several versions of an S&P 500 ETF, a Dow Jones ETF, or a sector ETF such as financials or whatever.
Yeah.
The latest thing over the last 2 years is what I describe as geared ETFs. It used to be when you bought an ETF, you'd pay your money and buy. It was 1-to-1 to match the index. So the index goes up 1 point. This should track the index 1 point.
No, what are we going, first, second, third, and fourth gears?
No, what has now happened and has been very popular over the last 2 years is geared ETFs where you get a leverage rate of 2-to-1. So the index moves 1 point. In theory, the ETF moves 2.
Okay.
And in fact, the last 6 months...
Is this a leverage of some sort?
It's a 2-to-1, it's a leverage.
It's a leverage. So
but you don't have to borrow the money to leverage.
Why don't I have to borrow the money?
Because it's all done within the context of the ETF. It's already levered inside the ETF itself.
Okay.
So you don't need a margin account to buy it. You could buy it in RSP, for example.
So you're telling me that somebody's already sort of doubled it up in there with that, right. But I buy one share of this one, which is already a double. I gotcha.
Okay. The last 2 quarters, they've actually introduced a 3 times ETF. So you get a leverage rate of 3-to-1, 1 point moving index of 3-to-1. Now, in the last 2 years, another phenomenon has taken place is geared short ETFs. So if you want to bet the market down or purely hedge, an example, there's geared short ETFs here in Canada as well as the United States. So a good example may be if you were a very smart person 18 months ago and thought that the market was going to get a bashing such as it has had, but you did not want to disturb the holdings in your portfolio for tax reasons, you could have bought these ETFs geared short and as a proportion of your portfolio. And an exact example would be if you were you had half of your money invested in equities, which replicated kind of like the Standard & Poor's 500. You could buy an S&P 500 geared short ETF and neutralize any equity exposure in the portfolio. You
could hedge your bets.
You're fully hedged. It's 100% hedged. The technical term for that in the portfolio management business is called immunization.
Immunization.
So,
does it give you autism?
So there's the popularity of ETFs is growing leaps and bounds. I mean, it literally, and there's even a further development since those last long-short ETFs that have come about just very, very recently.
Would it be an ETF if I looked at the Dow Jones, took the 30 shares that are in it, and bought $1,000 worth of each one? Would that be the equivalent of an ETF?
Yes. You have to. Different ETFs are made up differently. Some are equal weighted. Some are capitalization weighted, so they're like an indice where they. So it's not like. Various ones have different characteristics, underlying characteristics as to how they're constructed.
So one ETF is not necessarily the same as another ETF.
Now let's talk a little...
Can they be materially different?
Well, they can somewhat different.
Can I have somebody really explain an ETF to me and it sounds like this is exactly what I want to do.
Yeah.
And then sell
For the
me
most part, well, let me say
a
this.
different ETF that is nothing like what I wanted, but it's an ETF.
No, they don't. What you're referring to is